It's like the good old boys. So like there's about 44,000 approximate parks in the US. It's a lot of industry relationships, just like you alluded to. Like I was supposed to be one of the main speakers at the National Congress, MHI Congress and Expo this year. Obviously COVID got postponed, but Dr. Ben Carson was one of the speakers and also the CEO of Clayton Homes, which is the biggest home manufacturer. They produce about 50,000 of the 100,000 mobile homes per year. So I was one of the 12 main speakers. Hopefully 2021, April, May, they'll have it in person. But being and speaking in front of those stages, going to the trade shows when they're actually in person.
Welcome to the Bulletproof Cashflow podcast. Let's get into the show.
Hey everyone, this is Augustino. There's a lot of interest in real estate these days, and people are looking to invest in many alternative asset classes aside from the popular multifamily space. And mobile home parks have been known to be very, very profitable. Well, today's guest knows all about the key aspects of this asset class and understands the advantages of investing in mobile homes and mobile home parks. Now, having an extensive real estate background that started early on, he grew up in a real estate family where his father was a GC for over 80 custom homes, including being selected as a preferred home builder by Inland Real Estate. Now, today, he is a fund manager at Midwest Park Capital, a private real estate investment firm that provides equity investors and accredited investors, rather, with access to high yield investments in the mobile home park vertical. Additionally, he is the founding director of Revenue Ascend, a digital marketing agency. Now, with all that, I'd like to welcome Jonathan Tuttle to the show. Hey, Jonathan, thanks for coming on, bud.
Thanks for having me on. I'm excited to be here. Thank you.
Yeah, thanks. I think it's going to be super. Now, if you like what Jonathan has to say, you can reach him via his contact page at midwestparkcapital.com. If you like our content, please don't forget to leave a comment and rate the show. It helps us out tremendously when you do. Finally, if you text the word freedom to 202-410-4202, you get our free ebook, The Bulletproof Guide to Finding a Broker. Okay, Jonathan, go ahead and tell the listeners a little bit more about how you got your start.
Sure. Yeah, thanks for having me again. Like you alluded to in the intro, I growing up in a real estate family. My dad was a contractor. He also, at the same time, during the 80s, had 3 real estate offices, like brokerage office. So basically, when I was a very, very little kid, I'd be playing with the staplers, going on the job sites, literally seeing all aspects from the ground up, from the brokerage side to the development side. He also invested in different commercial real estate asset classes. So I kind of had that boots in the ground from a very early age, and also saw the work ethic of, it's the weekend, it's doing your due diligence. It's literally learning every aspect of real estate to really provide value. And then eventually later on, he got into mobile home parks around 2005 or 6, when it was still kind of taboo. It wasn't really commonplace. There was a little knowledge about it, but it wasn't like mainstream like it is 2020 going on 21 now. So we got our first park then, and then I knew right away within the first year, he's like, I wish I would have gotten to space 15, 20 years ago. When everything was like, pennies on the dollar compared to what it is, or you could actually develop parks then. So that's kind of how I got involved in the park space. And then I did park brokerage from 2010 to about 2016. And then now I focus on the mobile home park fund. So, buying deals, finding deals, doing all the, boots in the ground for our investors. And we do it in the mobile home park space. So.
Excellent. So the thing about the mobile home parks, as far as I understand it anyway, is that they're not making any new ones. So it sounds, or at least they're tougher to come by. So is that actually a true statement? And if it is, how do you find new inventory?
Yep, exactly. It's very similar to multifamily, like the whole premise and the concept of it. It's just the zoning stipulation, right? It's almost impossible based on. There's a couple of different data sources out there, but they're saying about 10 new parks have been developed in the last 20 years. Even though there's such a need for affordable housing in the US, the government doesn't really allow new parks. It's the stigma. It's also the taxation, just approval process. There's probably a few more, but they're usually RV/self-storage. There's usually some other kind of component to it that allows it to be transitioned over typically, but a brand new park is almost impossible. And also, it's a different play than multifamily. If you were just from right now, if you had to buy the lots or buy the land, develop the lots, and then bring in all these new mobile homes, an average new mobile home now is 50, 80 to 100,000. So it's not as comparatively when you're buying a cash flowing, like if you're doing multifamily, same premise. If you're buying a cash flowing asset, it's much better if you want an immediate return to buy a park that already has cash flow tenants. It's already, a business and operating instead of developing one from the ground up and waiting 4 years before it becomes profitable. So it doesn't even really make sense for most people to even develop them anyway. Majority of the parks were developed between the golden eras were the 50s and 60s. And then the HUD era, which is really good too, is probably the best, is 70s and 80s. And around 1990 is when they started really slowing down with developments.
Okay. So how do you find deals today? I mean, again, talking to friends in this business is kind of like they know who all the owners are, and they kind of just keep in touch with them, and hopefully they get tired of owning one of these mobile home parks and they just eventually sell it off, I guess is how I understand it. Is there some other way for you to get your hands on these sorts of assets? Because again, I guess they're not really building any new ones. I mean, or maybe there are, but like you said, they're tougher to get your hands on because of all the zoning issues, among other things. Like, how do you find the new assets then?
No, they're 100%. You're 100% correct. It's because just to give you a comparative analysis, self-storage is kind of complementary, similar niche to ours. We've been consolidated. We're 20 years older than that industry, but we've been consolidated like 75, 80% less than them. And both of our niches have been really popular the last few years, last decade especially. Um, it's like the good old boys. So like there's about 44,000 approximate parks in the US. It's a lot of industry relationships, just like you alluded to. Like I was supposed to be one of the main speakers at the National Congress, MHI Congress and Expo this year. Obviously COVID got postponed, but Dr. Ben Carson was one of the speakers and also the CEO of Clayton Homes, which is the biggest home manufacturer. They produce about 50,000 of the 100,000 mobile homes per year. So I was one of the 12 main speakers. Hopefully 2021, April, May, they'll have it in person. But being and speaking in front of those stages, going to the trade shows when they're actually in person, because a lot of these, like you alluded to, a lot of these baby boomers that developed in the 50s, 60s, 70s, they're not as tech friendly. So it's even though they're doing conferences, it's online. So it's a lot of these relationships had to have been established before the whole COVID situation. And it's really just like anything, it's establish initial relationships, doing the trade shows, boots on the ground, going, driving through the parks, driving through tours of, all the parks in your state, making friends with the owners, following up with them, email, phone every, 3 to 6 months, also maybe take them out to dinner. And then also the park brokers and the park brokers in our niche, there's a handful of guys, and they know who the people they want to sell to. It's like they'll put it out to like 300 to 500 investors, and those are the people that have access to the deals. By the time it hits like the mobile home park store or any online, it's already been picked through, and it's like either it doesn't make sense for scale of economics, or there's some dirt or something hairy about the deal that they'll pass up. So it's a lot of basically establishing relationships, building the groundwork, and like the longer you've been in the industry, the more people know, like, and trust you. Those are the ones that get the deals.
So it sounds to me like it's similar to every other business, every other vertical in the real estate game, right? I mean, it's once you get started, let's say in multifamily, for instance, in my case, that's where I got, well, first it was single family, then multifamily. Getting into development was that much easier for us because I already had a background in multifamily, and getting into multifamily is easier because it's the single family space. I mean, there's people out there right now that are probably listening to this and they're like, man, I just want to go straight into doing mobile home parks because that's where they hear about all the places to be. So like how does someone getting started then really get into it then? Does it matter just trying to connect with brokers, and it's the same sort of thing you do multifamily where you have your credibility book and you go and reach out to them, try to do, like you said, talk to the owners, that kind of thing? Or is there some other way to do it?
That'd be a great start. I think the real opportunity right now is smaller deals. So if you could do a smaller deal just to get like a little track record, kind of like you mentioned, the single to multifamily, even if it's a smaller deal, if it's within 2 hours, obviously you don't want to buy a job, but just to say it's a big difference when you go to a broker or an owner, like I actually own a park currently, then like I just heard about this yesterday and I want to buy, because you're not going to, typically you have to learn the curve. You'd have to show that you could close on a deal. It shows you're passionate about the industry. It's a lot harder getting that first hurdle. So just get a smaller park so you get familiar with it, and buy those ones on like the mobile home park store. Maybe they're not the best deal, but just for the track record and experience, it's a great great start to your mobile home park investing. Or invest in like a fund, where there's a couple of good funds. We're one of them. It's a good way to learn the industry, passively get the the cash flow, but understand what's going on and then see how the whole like how the whole industry operates. It's a good way is like through our fund Midwest Park Capital or one of the other funds, or just acquire your first park and just reach out to the owners. The park brokers will sell the smaller deals. If you own other commercial real estate, that's also another good. If you're a multifamily owner, you have a duplex, you'll be looked more favorable than someone that's never invested. The main thing is get some guidance so you don't back out of a deal. If you back out of a deal, the broker is never going to send you, and your reputation is tarnished, because if you back out a deal, they waste the owner's time, and then they're not getting any referrals either. So you got to think of it from all angles when you're investing in mobile home parks.
Yeah, the same rules apply. The same rules apply whether if you're going to throw down on a deal, throw down on the deal and don't back out of that deal. You better be sure you want to do that deal, unless of course there's a reason to get out of it. Like they change the terms of the deal. You discover that there's more things wrong with the place than because they hit it or whatever the case may be. Of course, there's reasons to get out of a deal, but I'm happy to say that every single time I've thrown down on a deal, I'm ready to do a deal. So now, Jonathan, did you mention a website? What was it? Mobile home store or something like that, right?
Park store is like a good website to see smaller listings for how to acquire parks. Basically, they'll have every state if there's a listing. Well, besides Hawaii, because there's none in Hawaii, but it'll have every state listing and sometimes you'll find like non-park brokers, like say a local realtor in a small town, they'll throw their listings on there because they know there's eyeballs on there. So you actually can find a random small town, single family realtor that was friends with the owner of the park, and they throw it on there because they don't know how to really market it. So you can find some smaller deals on there. They're actually, just be prepared. It'll be a bidding war, because if it's a decent value and they don't know how to underwrite it correctly, you could actually find some good properties on there on the 30 to 75 units.
Right. So let's talk a little bit about the operations side of things. Like, one thing that I understand about these mobile home parks is that unlike a multifamily where you're renting out a unit, you get a tenant in there, maybe they take care of the place, maybe they don't. They end up smacking the place up, trashing it, they leave. Great. Now you have to spend a bunch of money to turn a unit. But in the case of a mobile home park, which I think is the appealing point, is that trailer, I guess, for lack of a better term, I don't know what your technical term is, that usually belongs to the owner of that space. But what they end up, because they're only renting the land from you, and if they end up leaving, they usually leave that thing behind, right? And then you end up just taking it over, and then now you own the trailer, and now you just put a new person in that trailer. Is that roughly what it is? Or maybe you can just help fill in the gaps or just explain the whole thing.
Yeah, sure. There's a couple of dynamics to that, but yeah, one of the advantages, the average mobile home park tenant stays about 14 years. So compared to any other commercial real estate asset, once you get a good tenant in there, you pretty much know they're not going anywhere, because give you a comparative analysis, we're usually one half the price of a local garden style apartment, like a Class C apartment, which would be like probably the same tenant would go to either the garden style apartment. Plus the advantages we do, like a lot of our industry is either $10 an hour or minimum wage, $10 to $15 an hour, and or baby boomers retiring. And obviously there's 10,000 baby boomers retiring every day. And also the middle class, like the middle or lower income, is going down and down. That's always going to continue. So we have like 60 million people need affordable housing in the US. There's only 20 million. Or 60 million Americans need affordable housing. There's 12 million, approximately mobile homes. So you have this huge urgent need and very low supply. So that also factors into it. You typically want to own, it's kind of called like a land lease, where you want to, especially for Fannie and Freddie financing, which is now really big in our space. 10 years ago, the government wasn't really lending on mobile home parks. The last 5 years, Fannie and Freddie have been huge proponents of affordable housing, specifically manufactured housing. They have to allocate about 37% to affordable housing. And the biggest recipient of that is mobile home parks, manufactured land lease, whatever you want to call it. And one of the stipulations they require is what you alluded to, is they have to have less than approximately 20 to 25 tenant park-owned homes. So like you want to be ideally, where you own the land and then they own, the trailer. And what you do when you take over, acquisition of park is you want to get those off your hands. Basically, that's the first one of the ways you can improve operational efficiencies, improve cash flow, and making sure it's more stabilized asset is by getting market those units and get the people to stay, pay off so they own the unit. Ideally, you don't want to be doing, you don't want to have extra headaches basically. You want them off your hands. You want the tenant to take care of their own asset. So that's another thing. Yeah. So 14 years, the Fannie Freddie, they want that too. Right now, actually, just give you like a little context. We're actually lower rates than for institutional. We're high twos, low threes. 10-year non-recourse on mobile home parks is actually lower.
Wow.
It's a tad bit lower than multifamily. That's how much they trust in it. Well, they didn't even 10 years ago, they weren't even wiping their hands with it. Now they're like, what do you have?
No, I was just going to say that because I literally just had a call right now. We're working on a big deal. It's well over 30 million. And the rates are going to be in the threes, like let's say, low to mid threes. And I thought that was good. Now you're telling me in the twos, but I think it goes back to your point is that they know that those tenants are going to be there long term, right? They're not bouncing around like they do in a typical multifamily deal where they're going in that not all the time, but on a B or an A class asset, you're going to get those more favorable returns. But in a class C, which is what most people are into because there's a lot of inventory. Yeah, they usually stick around for a year or two. They might put holes in the walls and trash the place out, and whatever the case may be. So yeah, it's a little more expensive, but still, that's crazy, man. That's what a great rate. It's a super rate.
Yeah. Yep.
Yeah.
Yeah, no, 100% right. And it's one of the things that have been driving our cap rates compression those last year. We've never seen such compression in our industry because we were notoriously known for really high cap rates. And we used to be like 10 years ago, 10 cap was like 8 for institutional, 7, 8 for institutional quality, 10 cap, secondary, tertiary, hour outside the city. Now we're seeing 6 is commonplace, 6.5, maybe 7. It depends obviously the quality asset. And then like institutional stuff, if you're in California, you're in the 4s. You're not much different than a multifamily. But the value add is obviously that's more for like Wall Street. Wall Street's really gotten our space. Blackstone, Apollo Management, all these the biggest private equity have been the last couple of years of buying billions and billions of dollars in mobile home parks, including, Blackstone's during the last recession, last housing crash, they were America's biggest investor in single family. This time they're putting huge proponent onto mobile home parks. They just bought 550, I'm pretty sure it closed, but 550 million in Florida alone last month, or about 2 months ago now. So it shows you that the Wall Street sees the demand. They see and just to give you a little more context, this year, institutional data, Green Street just came out with a report. Green Street, they do data for all different commercial real estate asset classes. They just said this year, mobile home parks and industrial, the only two that have actually appreciated in value. And I think mobile home parks appreciate 8%. Right now, we're also seeing 94% collection rate across institutional ownership data. And I was at a conference about 2 months ago, the Southeastern Conference Owners, and they had the head of Wall Street commercial lending on there. And they do all different asset classes. So like nobody's even close to mobile parks. We're seeing 96% collection rate. And it really comes down to supply and demand. Them owning the units. It's a third the price of a house in the same town. You make $10 an hour, you have that big cushion, so you don't have to worry about it. And then also people got the $1,200 page, stimulus. And then you also have half the population or most parks as senior citizens, or you get their Social Security and their retirement. So they have that cushion. So you don't have to really worry about if they can't afford it they're going to be homeless. So that's what really keeps the demand and it keeps the occupancy really high in these parks because you really supply that affordable housing. It's the last non-subsidized affordable housing in America.
Wow, that's crazy. And then when it comes to utilities and all that stuff, of course, they're paying all that. You bring the utilities right to the lot, right where that trailer is, and they're responsible for all utilities. And I can't imagine that those trailers use a lot of utilities. So just to what you just said a second ago, it's affordable. It truly is affordable living, right?
No, you're 100% right. I'll give you a little idea about that too. So just in Illinois, we're really notorious for really high real estate tax, like astronomical. That's why we were talking about before. Everyone's moving out of the state, they're moving to Florida. But comparative analysis, like if you had you're in a small town, secondary tertiary market, a single family house, 150, 200,000, typical price, you're probably paying 3 or 4 thousand real estate taxes. But you live in the mobile home across the street, it's $10 a month, maybe $8 a month in real estate taxes. So that's kind of like their equity, because they stay 14 years. They have, they're saving $3,000 a year basically in real estate taxes over 15 years. That's $45,000. It's a third of the price of the house. So that's kind of like their equity, but they get the same schools, same fire, same, library, all the same advantages of being a taxpayer, but they pay a fraction of it. And then another advantage too is if you acquire those mom and pop owners, remember these are second and third generation owners. Sometimes if you're thinking, some of these people develop these like 30, 40 years ago, the kids usually don't want to own them. They just want to cash out and live in Miami, and because they're getting multi-million-dollar payday. And then the park owner, the original park owner, they've had it for 30, 40 years. They're in a small town. That asset's worth 3, 5, 7, $10 million plus the cash flow. A lot of times they haven't maximized the value. So the rents, you could take over when you acquire a park, you could raise the rents to, there was a study from a Duke professor of financing, mobile home parks in the 50s and 60s were about $50 lot rent. Right now, they're like, if you factor out California and some of those like institutional quality assets, like 350, 400, but it should be 500 to 600 in accordance to match inflation. So they're actually lower than what they've been, or what they should be. So you could obviously acquire the asset, raise the rents ethically, bring in some CapEx, but also managing the property better. Some of these old mom and pops, sometimes they don't do bill back of the water sewer. So you check with your local laws. But if you have them where they traditionally lower their expenses 30% when they have to manage their own water, but it is very, very cheap because it's a small trailer. But if that's another, when you're acquiring a park, have bill back, if you can, by law, bill back the water, sewer, all the, utilities, that's off your books. They manage it better, super cheap anyway, but that increases your cash flow management is better. And then also when you acquire the park, you could buy these parks. You look for these smaller town guys that they don't really care to maximize because there was some, millionaire many times over, so they're not really caring. They just want the legacy and just the goodwill of the people. But you come in and you can improve upon those.
Yeah. Well, and I think you just hit the nail on the head, though, too. The tax revenue is what it comes down to, right? I would imagine that nobody wants, or rather, the cities don't want anyone to build these things because it's more advantageous for them to build a high rise or to build a housing project as opposed to putting in one of these mobile home parks, because they'll get more taxes basically from those individuals living in some sort of housing community, right?
Exactly. Yeah. So that's one of the biggest, even though we have such a need for affordable housing, the cities don't want the lower tax base. So, and then the stigma. And so like the olders, like the 50s, 60s or 70s, 80s in the HUD era, the parks were actually a better location because that was kind of grandfathered in during that time. And then that's why even now it's almost impossible because of the taxation, and they don't want to give them prime locations. But you'll see that there's data that says about 1%. I think that's a little high, but a lot of these parks are getting torn down. Especially if you're in like Florida, you'll see one and like they're on prime, they have waterfront locations. It's way better, more advantageous to do assisted living community that charges $6,000 per tenant than a $500-$600 lot mobile home that has its own private yard. So, just for that zoning and the taxation basis, cities want the bigger tax basis, even though we provide that last affordable housing. So it's kind of that tug of war, which really works to investors. And then also ethically, it helps these people. Like, we're providing this affordable housing, and we're paying as a property owner owning the land, we have to pay the bulk of the taxes and providing that cheap form. They're getting one half comparatively to a Class C apartment, one third of a single family house, and plus the taxation basis. So we do provide a really good service to people that need it. And that's the cool thing about it. It's just providing that affordable housing, but at the same time, it provides this really safe and strong investment for investors and us.
So if you wanted to go and try to get one of these things built anyway, I mean, is it worth fighting City Hall, or there's some places this probably makes more sense to do than others, or like how would someone get one of these things built out? Like, how would it, like, obviously it starts with zoning, it sounds like, right? But how and where would you say is probably the best place to do this?
I think what I've heard a couple people have been trying to do is more of a senior focus. Like, kind of like an assisted living concept, but not be assisted living, but affordable version of that, where you could be like in like a high prime location, like Washington, Oregon, California, Florida. Some of these where people are actually gravitating towards have like where the houses are going to probably be 80, 100,000, but you're going for that assisted living and have a fully amenity mobile home park. The assisted living, your typical assisted living is $4, $6, $7, $8,000 a month. And so if you could provide the same level for under 1,000, have amenities, have community events, that's where it makes sense. If you're just doing for the affordable housing option, that really wouldn't make sense. But if you could do if you were positioning a luxury, affordable senior housing, that would be your dynamic and like a go-to spot where people want to go to and retire. I think that's the angle. I've been hearing a couple doing that because, okay, I'm buying $100,000 mobile home and I'm paying $500-$600 lot rent. It's way better than, and then they have amenities. It's all brand new and it's in a great location, safe. I don't have to walk upstairs. I have everything I need. And that's a better dynamic than in those areas where an average house, like in California, you're not getting anything for under like $750 or $1 million, and or the assisted living $7,000 a month. You're really, again, providing the affordable but luxury angle. And I think that's the component that really makes sense if you get the zoning approval. And the zoning approval is the biggest, a lot of process. It's going to cost you money. I mean, if you'd had that strategy, I think that would be a way I'd position it to the cities. Like, hey,
Yeah.
we're affordable. These are all brand new communities. You could come through, take them, show them some photos, some videos of these new homes, because their new homes are beautiful. They're actually, if you ever get a chance, go through like the new mobile homes. They're not like, they're pretty amazing. Like I live in the River North here in Chicago, and like an average one bedroom is 3,000 to 4,000, and it's the same. I've had friends we walk through them. They're like, wow, this is just like going in a luxury apartment, a Class A apartment. So you'll have that luxury component, but still affordable compared to the other options out there.
Right. Well, I think, and the same thing applies though. Whenever you're going through that whole process of zoning and then a land acquisition and all that fun stuff, I mean, I'm doing a redevelopment project right now, and it takes years to get to actually just acquire the asset. And in terms of the land, sometimes let alone the zoning and everything else that comes along with it. So it sounds to me like you have to be really prepared for the long haul for something like this, right?
Yeah, exactly. And that's why we like to, like with our fund and most investors, we're buying a cash flow business from day one. The banks, it's a lot easier to get Fannie, Freddie, it's a lot easier to get financing. It's just a lot easier to play. And then another advantage too, is with the mobile home parks, the land improvements. This is most people don't understand this dynamic, but the tax depreciation schedule, because especially in the Midwest and these other communities, if it's on the concrete where you place the homes, you can write off 65 to 75% of the entire park because it's all land improvements when you acquire it. And so you have a 15-year depreciation schedule. Multifamily is 27.5, and then traditional commercial real estate is 39. So we have the lowest 65 to 75% when you acquire a park is on the 15-year depreciation. Plus, if any of the tenant-owned homes or the park-owned homes, we depreciate those at 27.5. So we have the most advantageous tax depreciation schedules, huge demand. And then the real opportunity is if you get a Fannie Freddie like qualified park, you have, as long as you're acquiring a park in over 6 and you're getting a 3% rate, you're getting a mid to high teen cash and cash return. So you're getting a great cash flow right from the get-go. If it's a small mom and pop owner that hasn't raised the rents, over 60, 90 days, put in some capex, put in some flowers, put in some more, dog park, put in some grills, some community amenities, and all of a sudden you raise that rent with no say, oh, you're putting all this in here, improve the roads, cut, trim the bushes and trees. They're not going to go anywhere because they're like, oh, they're putting all this new stuff. It's revitalizing community, and all of a sudden your equity multiple is going up drastically while the tenants pay down the mortgage.
Yeah, no, and I'm a huge proponent of partnerships. Even if you're investing as a limited partner in an existing deal, it gets your foot in the door, it gets you started, right? And I tell my students, I tell other people, hey, you know what? If you really want to get into multifamily, you have zero experience, invest in one of our deals. Just go ahead and do that. If they're accredited, of course, and that way they can learn from us how to get into a deal, and they also get to leverage that knowledge, that experience to get into deals of their own one day. But it's kind of like you got to take that step forward, right? You got to actually move towards it, I think, right?
Yeah, exactly. That's the only way. We all have to start somewhere. We have to get Like when I first started out, obviously through my dad, but then going to the trade shows for years and years, and then actually networking with the people in the industry, having those resources, having coaches, mentors, paying a lot of money to get that expertise and that skill set and the knowledge transfer. You just can't go from A to Z like from an overnight. So like with anything, you could try it, and yeah, you do learn on boots on the ground, but you're gonna have some curveballs that can, make the deal go south. So leveraging other people's expertise and skill set and relationships is the way that's going to give you the background, the knowledge, skill set needed to, succeed in these industries. And like you said, the quickest way to do it is to passively through one of our funds, and then also hiring people as mentors and to really get that, because the more successful a person is, their time is valuable, and time you can't replicate time ever again. So they can have all the money in the world, but time is something they don't want to give up easily. So pay for that knowledge transfer, skill set, invest in the fund, learn the business is the quickest way to succeed. You can read all the books you want, you can watch all the videos on YouTube, but it's a way different when your skin's in the game and you're actually boots on the ground and you're actually, doing the business angle component. So pay for that speed to execution, and the time and everything else will follow, and you'll be in a way better position.
Oh, 100%. I mean, you know what? Yes, for anybody listening that wants to get into that whole space, yeah, give Jonathan a call. I mean, I think that it sounds to me like it's a much trickier trickier setup, to get into the mobile home space than it would be to even get into multifamily, or hell, even single family for that matter. But there are ways to do it, and there's certain markets you can attack and should attack, and other ones you should stay away from. It's the same thing as any other asset class. But no sense in trying to go through the ins and outs yourself when there's people already out there doing it, right? And why not piggyback on that experience and that success, right? That's how I see it anyway. So, Jonathan, if someone's listening right now and they're kind of on the fence, that they don't know really what to do, what sort of bulletproof advice would you give that person?
Well, I probably should have used this for what I just mentioned or alluded to, but yeah, paying for speed execution, mentors, education. I make a daily focus of continuously learning. Like they say, the average CEO reads 52 books a year. So I get up at 6:37 every morning, sometimes like 6, but I've been trying to improve my sleep patterns with my Fitbit. So I'm getting more effective days. But I always get 2 hours in the morning. I do a podcast, and like I do my cardio on the machine, on my weights. I do a podcast instead of music or a book. And at the end of the year, if you're doing the gym 6 days a week, an average book is 7, 8 hours on Apple or on any of these apps basically. So you could get a book. You can read up 52 books a year, and then before I go to sleep, I always do a podcast for the last hour, and I fall asleep to that. So then you can catch up. You're not going to obviously retain all of it if you're kind of passing out, but you're getting so much more continuous knowledge that's going to make you smarter and more versed. And when you start dealing with more seasoned investors, that's a way to cut the learning curve. People are going to listen to you more. Like that's the thing I've learned in the last few years. Now I'll have conversations with very high net worth people with 100 million plus net worth, a couple 100 million, and they'll actually talk to me for 45, 50 minutes, if not longer, because I bring value, and the value I've had to bring something they had to learn about, and I'm bringing speed execution to them. So not just reaching out to them, but actually having knowledge and something that they can learn from. They love that. And so that's what one is, any investor or any person in entrepreneurship or business, continuing to bring value and continuing to learn. You're going to build stronger relationships. You're going to be in better business. And how to do that? Continuing to listen to podcasts and books and mentors. And that's what's really going to put.
Excellent. And you know what, though, when you put more information in your head, you're able to deliver more value to people, including those people that want to invest with you, including those people that maybe you want to aspire to be like them one day, like your friends there that with a couple $100 million of net worth. Those are the sorts of people you want to be hanging out with, right? And you're delivering value to them because they're actually listening to you, and that's gives you a big leg up over your competition. For sure. Yeah. All right, guys. Well, if you want to reach out to Jonathan, you can reach him via his website at midwestparkcapital.com. Hope you got some insight on the mobile home space and how to jump into it. Thanks for tuning in, and I'll see you in the next episode. Take care. Hey, Agostino here, and I would love to connect directly with you. Text the word books to 202-410-4202 to receive weekly book recommendations from me.